What is up? Vivamort, how you doing, man? Yeah, adjust this volume here. So it looks like we're finally getting that correction that we've been anticipating. The whole market's been anticipating this, so it finally happened. Remember yesterday? What's up, Sean? How you doing? Yesterday we were discussing some key levels. If I zoom in on the daily chart, I was talking about if we lose or if we get below these lows here. Let me make it a different color and I'll hide the these key levels and things, and maybe the price levels. So yeah, I was saying if we get below this line, the market structure has shifted, and it has happened. There's still 2 hours and 50 minutes until this daily candle closes, so for all we know, this could turn into just like some giant wick that came below these lows. But if we get a solid close, like if we get a candle body close down here, then that pretty much confirms that this support structure has been broken, and we're going to be like hunting out lower prices for support. So yeah, the FEB levels, let's have a look at those as well. So taking a retracement, let's take it from the extreme low of 2022 down at $15,476 on this chart, and then all the way to the extreme top since that low. And you can see we've just recently broken down through that first FEB level, the 236 FEB. Now the 382, that is $20,900 roughly. And then you've got the 50%. A 50% retracement would take us back down to $19,865. And then the golden fib, a 618 retrace, would be $18,830. Now, a really deep, a 786 retracement would be $17,350. And then, of course, obviously, a one-to-one retracement is all the way back to the starting point, 15,476. So yeah, look, there's a many key levels, not just the fibs, to look at. So we've got to keep an eye on the fibs, but I'm going to remove this now. Let's look at key levels. So we have our June low at 17,600. We've got a couple of opens and lows down here at 16.5. And then what else do we have? I'll hide the key levels and we'll go to resistances. So our November high from last year was 21,480. So you can see there's many different like sort of points on the chart which could produce a bounce or a test of support. So if let me turn on those. Now the OLHC is the open, low, high, close of each year. So we don't have anything until like from that spectrum until 19,800, which was the 2017 high. So that's our old all-time high back from 2017. So, and then, if we get below that, there's some other levels as well. But let's turn every level on now and see, because there's also the big round numbers, just the psychological price levels as well. So many different levels. And then you've also got trend lines to look at too. So there's as you can see, just as on the way up with resistance, there's many levels to look at, and just as on the way down, there's many levels to also look at for potential support. So always keeping in mind where support can happen and where resistance can happen. So why did we get resistance where we did? Why have we hit a block in the road so to speak. Well, it wasn't quite a test of the August high, was it? It came short. We got just above 24k, and then we turned around. So maybe it wasn't like a levels situation, but more of a timing situation, like to do with, figures coming out. So yeah, potentially it wasn't some kind of price resistance level. Maybe there's something I'm missing with trend lines or something like that, but from what I can tell, yeah, there's no real significant, obvious reason as to why we pulled up where we did at 24,250. But let's check also. Now, there's moving averages that we could look at. There's weeklies and dailies and things like that. So if I turn off, I'm going to turn these levels back off and see if there's any rhyme or reason as to why maybe they are going to shed some light on why we pulled up where we did. What's up, Aaron? What's up, MG? Smash up the like button, guys. All right. So from a daily perspective, there's no moving average that was above us as far as the 50s and the 200s go. On the weeklies, though, look at that. Look at the traffic. Huge traffic jam. So you could argue that it was the 200 weekly exponential moving average that caused the resistance that we just could not fight and get above. And it was the same back in August. See how we tagged it and it rejected us? Once again, we tagged it. We actually wicked through it, but we could not close a week above it at this stage. So it's being resistant for now. But yeah, I mean, from a daily perspective, we do have momentum traveling up still, and there's a few different moving averages here which could produce some kind of support. So yeah, I don't know. We'll just have to see. I'm not going to pretend to you guys that I know where the support or where the bounce is going to happen. I don't think anyone really does. It'll just happen where it happens, and then it'll be really obvious after the fact, won't it? Just like usual. But yeah, all we can really do is kind of maybe look at Fibonacci levels and previous levels of support and resistance to see where this thing might start to slow up and find support. If I go back to my oscillators here, we've got a stochastic RSI, just a regular RSI, and then the MACD as well. Now from a daily perspective, they were all kind of saying similar things in this region here, and that was that things were very overbought. It took a number of days, as we all know, for this to finally start picking up and taking effect. Now the stochastic RSI is going to be the most sensitive oscillator to any kind of movement in the energy behind the market, right? So it started dropping all the way back here, the stochastic, right? It started coming back down through all this, which is kind of like a telltale sign that, okay, this move has run out of momentum, right? I mean, the standard RSI, though, that was hanging above overbought for some time there, and it didn't actually pop down until this, big red candle here. Well, purple on my screen, but yeah, that's what we're looking at there. And then obviously we had our MACD cross back down here with histogram bars growing. So that's another indication that things were starting to sell off before they really broke any kind of supports. So these are kind of like hints. So yeah, the oscillators do play a role, but they're not going to tell you exactly where the pivot is. Like that's the sad thing about it. Like it's not going to be like, oh, it's hit this level on the oscillator, time to turn around. You know what I mean? So things can stay elevated, and for all we know, today could have been a candle in the opposite direction, but green. You know what I mean? Like up higher than, so making a new high, and then the oscillators would reflect that move. So they would actually start going. They would show that there's a bounce, but because price came down, oscillators reflect that. So just remember, the price is king. Price is going to be the priority and most important indication of, you know, where things are headed. Oscillators, pretty much 99% of indicators are lagging, so they're actually reporting things after the fact. So that's why they look so good, because, like, you know, they're just reporting things that have happened already. It's like, oh, we came down. Oh wow, that's clever. I could tell you that just with a naked chart like this, right? Oh yeah, we came down, because that's what the oscillators kind of say, right? Stochastic's pretty good though. Like it seems to have called it a little earlier. Like, you know, you had a stochastic cross down all the way back here, and there was divergence too. Like you can see the second hump there is lower, while price got higher. RSI, lower highs as well. So RSI divergence, bearish divergence. Even the MACD had a peak here. You can see how it was solid green histogram bars, then it got light green. So that denotes a top, like some kind of peak, which was this peak here. And then again, two solid green histogram bars here, followed by a series of lighter green, showing some kind of pivot here too. And that was basically just up here. So that's higher highs in price, lower highs on the histogram. So bearish divergence. And we did see some activity coming in, shooting up after the fact, like after getting that divergence, which was kind of confusing. It confuses the crowd, because it's like, okay, we're moving up, even though there's bearish divergence, we're still heading up. Like, it's like a delay. There's a lagging effect sometimes with divergence. So yeah, and that's not always the case too. Like sometimes divergence happens on time, and, you know, as soon as it gets you know, identified on the oscillators. So it's like, how do you really know what you're going to get? Is it going to be late? Is it going to be lagging? Or is it going to be on time? You just don't know. So that's why, you know, you can't put 100% of your reasoning into divergence. It needs to be, it can be a piece of the puzzle, but it's not the whole picture, if that makes sense. It's not the entire, you know, signal or answer to what's going to happen. It's just it's a hint. It's just a hint. It's just one piece of the puzzle. Okay, so that's the daily oscillators. They're all showing that they've hit some kind of high and that they're cooling back off again. Stochastic RSI is nice and on the floor here, but as we know, stochastic can stay on one end of the spectrum if need be. Like if this is going to keep dropping, this stochastic ain't going to push up. It's just going to reflect that it's on the floor, right? If we see a bounce, that's when you'll see the stochastic start, you know, because it's so sensitive, it'll start moving up quite, you know, quickly compared to the other oscillators here. But yeah, stochastic, yeah, it's an interesting one. It's quite different from the MACD and the RSI even. So that's the daily perspective. Let's check out, I know we're going back up in time frame, but let's check out the weekly. So the stochastic on the weekly is showing a cross here. And the kind of scary thing is there's a lot of room that it could potentially move down. However, when stochastic moves down, all the way down to the oversold, that doesn't necessarily mean that price has to come all the way down too. Like price could actually go chop sideways or even just slightly down to get that kind of response out of the stochastic RSI, if that makes sense, guys. So you can see here, like this is an example. this entire thing is a bull market, right? We all agree on that. This was a level of resistance at the time, which at the time pulled back and found support here, right? And look at the way the stochastic, reported on that move. It was a high here to represent this high, but then it cooled all the way back down, almost getting to oversold down here, which was this low here, right? So that's sort of paints a totally different picture to what the regular RSI was doing. So it sort of suggested that things were still overbought even after the pullback, right? Like this came down to sort of here, which was still elevated, So yeah, you can see it's less sensitive, and not to mention MACD was just climbing the whole time, basically. That 2-bar pullback there on the weekly, those it produced 2 light green histogram bars, which sort of shows a slowing of momentum, or a pullback in momentum. But look, histogram bars can come in at any color, depending on what happens with price. Because remember, once again, like I keep saying, price dictates what the indicators are going to say. It's price that says what goes. Price is king, guys. Price is king. That's why you even get some people, even successful traders, that don't even use indicators. They're just looking at candles and price, levels of support and resistance, and market structure. That's one way to completely go about doing technical analysis. You don't necessarily need oscillators and things. You can purely look at candles because they are very strong, especially on the high time frames, about telling you what's happening. All right, let's go back. I know this stream did start earlier than usual, and that's going to be the theme from now on, guys. Like, these streams aren't going to have a schedule. Like, I'm not a TV station. I don't have a time schedule that I can follow like that. I do have a life outside of crypto, surprisingly. So I'll do my best to try and be like, show up at a regular interval, like every day. But, you're going to get some streams that are just out of the blue. I do apologize if that's some big inconvenience to you, but look, the streams get uploaded anyway. So if you want to catch it, it's going to be there for you if you want to see what the hell I said, if you really care that much. But anyway, just thought I'd let you guys know that, like, don't expect me to be like military precision with my stream times or even my stream frequency. Like, some days I might not be able to stream. If you are on Discord, you'll see that I actually give updates every day to whether I'm streaming or not. Like, if I don't stream and it's like sort of out of the blue, like if it's coming unexpected, I'll let you guys know. Like, I'll try to inform you guys and keep you updated if I'm not gonna stream. But otherwise, yeah, streams will just happen when they happen. Don't hold me to them, like, or to any schedule, like, obligations. That's the beauty of running your own channel and doing your own thing, is like you get to pick, when it happens, what happens, and what you say, like, but yeah, I do understand, like, it is handy and helpful to have it at a regular time, so you can just come in when you please. And I know the majority of you don't care. Like, it's obviously, you're just happy campers. You'll catch it when it happens. So no dramas there. But anyway, enough said. That's I've made my point there. So let's see what's happening. We've still got like 2.5 hours to go till the daily close. So there's still a long time for things to happen. We could come down even further here and produce some much scarier prices for the bulls, right? If you're in a short, congratulations. Like, it's looking pretty cool. for the shorters out there. And not to, let me just see if this works. So I am like shorting the crap out of one of the shit coins called Bonk right now. And that's been working out well. I was close to stopping out on this one actually. I opened it up before I went to bed last night and it came so close to my stop and I was like, no, I'm gonna respect the stop loss. I'm not gonna move it. If I stop out, so be it. But yeah, I woke up pleasantly surprised. So this one has pulled in a nice result. I'm not going to choke it out just yet with Bitcoin coming down so heavy like this. I think there's potential for further downside with Bonk. Let's see, yeah, like, I mean, these wicks are kind of saying, ooh, there's a bit of buy pressure here. Like, you know, price did come down here, but it's been bought up to a certain degree, you know? But that doesn't mean that things can't get back on track with, obviously the trend is like this, right? This is the overall direction of the trend. You know, maybe I'll take 50% off the table, you know, just to sort of lock in and secure some of that move, just so I don't walk away empty-handed, you know what I mean? But yeah, not a bad one. So at this point, guys, I'd be careful with expecting, like at any point in time, be careful with expectations. I mean, that's a pretty good rule to live by anyway, because crypto can throw curveballs all over the place. The cool thing about this move down though was we saw it coming for many days. Like, I did say in yesterday's stream, if you caught that one, that I was looking at these lows here as my line in the sand. So see these wicks. Let me just change the thickness of this line so we can see it better. So those wicks there were basically my line in the sand. Like if we break down below those convincingly, then the structure has broken. So we've got like a change of character, right? If I go grab my ICT indicator, my Smart Money Concepts indicator, which one is it? Let me see. I think I've got it in this one. Okay, I'll turn them all off and we'll just have the Smart Money Concepts. This should, now it hasn't printed it yet, but you'll be seeing a change of character just like this. Once we get probably a candle close, it'll probably start printing it. Let's go to the 4-hour chart. Yeah, we're dealing with a change of character here. Change of character with a higher break of structure, which is really strange. Because, yeah, I guess just the way I have it set up, it's not reporting the change of character that happened to the upside after this one. But yeah, I guess, yeah, you're never going to get a red break of structure after a green change of character is printed on this indicator. It'll only do a break of structure after, like a break of structure after, you know, see, this is an example. See, green change of character, green break of structure. Red change of character, red break of structure. So you're never going to have a green break of structure before you get the indication of the change of character first, if that makes sense, guys. All right. So yeah, that's market structure. Let's go down to like the 1-hour time frame. Really nice pivot here. So the ones that are solid are like the swing structure. Like, so it's a bit more of the bigger moves. So we had like a big swing change of character back over here that broke. So that was pretty telling. And this was kind of like early, like the smaller structure, the smaller time frames were actually showing a change of character followed by break of structure, break of structure. So that's cool. And that's just pure price action or pure market structure analysis there. So change of character followed by a change of character back to the upside, back to the downside, back to the upside, back to the downside. So like you can see, if you wait for the break of structures to take a position, like this one was kind of tricky because it was just easing its way down without breaking structure, only changing character. So yeah, tricky. Kind of sneaky the way they've done this. You know what it looks like? It looks like, I mean, obviously the Wyckoff people are going to be calling this Wyckoff distribution. This just on, you know, on this like level of time frame. It's definitely like Wyckoff type distribution where it keeps people optimistic enough to stay long or to open new longs in this entire structure. But then this should have been telling here, and that was the right shoulder. I think yesterday I did mention that there was like a looming head and shoulders, which is a bearish reversal pattern, right? But yeah, look, it is what it is. As we see these things happen and play out, like, you learn more. It's all experience. So the more you're in this market, the more you're gonna see, and the more you're just gonna get used to seeing certain things. Like back here, like the thing that I see in this that's staring me in the face is a rising wedge, like from here. So it's like these lows here, linked up with these highs here, something like this, maybe even back here to this high, these highs here. It's not totally clean, but it's the bulk of the price action was forming some kind of wedge there, and as we all know, that rising wedges are a bearish pattern. Not to mention, obviously, FTX collapsing helped the case for the move down. And then we can't forget, obviously, our big falling wedge that we had. Let's bring in the TA. We'll go to the daily chart, and you can see, yeah, there was a massive falling wedge, which is a really cool play because like it broke out and it never came back. Like once it broke out, it was like game on, you know, and it rode all the way up. So are we in any kind of wedge at the moment? Like, can we see any kind of wedge pattern? Maybe on a lower time frame, like on the hourly, maybe there was a rising wedge that was playing out the whole time that I wasn't following. Let's see if I can find it. So that it looks like there was some structure here that got broken, like a trend that got broken. Something to this effect. Yep. And then on the top side, if I hide this indicator, I hide the recent TA. The top side is like this. You see that? Ooh, nasty. Sorry that I didn't have that drawn out earlier, but now that we've seen it break down, it's clear as day, isn't it? Oh well, I'll try to keep my eye on these rising and falling wedges. So can we see the beginnings of some kind of falling wedge? And I would say yes, there is, because we've got highs here. This is a trend. This is the resistance trend we have now, which is falling this time. See, the resistance trend was rising before, and now it's falling. So what happens after a falling resistance is usually a bullish move up. Not always, but usually. And then the support side, which I'll change back to white, so white and blue. Now, early days, but if this wick down is to be respected and we get some kind of pivot back up, then this could be some kind of falling wedge structure that we're dealing with now, you know? And the expected result of that, if it's going to go like, you know, textbook, would be a break to the upside eventually, out of the wedge. So I'll draw it out as to what I mean. Like if we get something beautiful like this, then you can expect maybe we get like a break, something like that, right? And that would kind of like coincide with a corrective move, so a 5-wave structure, like a 1, 2, 3, 4, 5, you know? But yeah, keep your eyes on the rising and falling wedges, guys. It's gonna give you some idea of what the trend is doing. So yeah, this one was cooked, and it was clear as day. Ain't no doubt about it. Like the higher time frames, like anything above the hour is gonna serve you well. Anything below the hour chart is not gonna be helpful to you, guys. For like longer swing plays. I mean, you shouldn't even have the 15, 5, and 1 minute time frames on your chart. Like, I would unfavorite them if you're trying to swing trade, because they're not helpful at all. They're just noise. They're not going to give you any kind of enlightenment as to what's happening if you're swing trading. Scalping, on the other hand, obviously they play the role with scalping and day trading. So totally understandable there. But if you want to know what's happening week to week, day to day, then ignore those small time frames. They're not going to help you at all. They're going to actually make you lose money because they're going to give you a lot of false signaling. Too much noise, guys. Too much noise. A land of confusion down on those time frames. So stick to the high ones for the larger moves. And look, I just want to list out the benefits to playing the swings. So let's list them. Benefits of swing trading. And there's many. There's not many benefits to scalping. But there are some, and I'll list them, but these are the benefits to swing trading. Okay. Less exposure or less frequent. How do I spell that? Frequent exposure to risk. Let's make this a smaller font. Let's make it look real pretty. Okay, we'll get like a little dash there because there's a couple. Less frequent exposure to risk. Like when you open a trade, you're exposing yourself to risk. If you're opening 5 trades a day or 10 trades a day, as opposed to just 1, you're opening yourself to 10 times more risk, or risk 10 more times a day compared to if you were just doing 1 trade a day, you know? So that's a swing trading benefit, less frequent exposure to risk. Now with that, if you're taking less trades, that is less fees. I know fees aren't a big deal for a lot of people. Like, you know, I'm happy to pay the fees because I want to get in and take advantage of the move. Like, cool, not a problem. If you're winning trades, your fees are going to get covered, no problem. Like, but over trading is actually like a silent killer because you're actually, like, those fees add up, especially on high leverage. Like if you're borrowing like a bulk. So let me just put in here less fees because of less. Well, I won't have to. I don't have to say because of anything. It's just less fees because you're not trading as often. Let's see. You can walk away. Let the trade play out. So you can have a life. You don't have to be like hawk-eyeing it every minute that ticks by of the day, like a scalper. When you're in a scalp, you're there monitoring it. It's like a day job. You have to actively watch it and take action in the short term because, you know, either you're happy to get it stopped out or you have to find the next opportunity when you're scalping. Like you always have to be there to catch it. Obviously, there is a happy medium between both methods of swing trading and scalping. Like there's like the sort of shorter term swings, like maybe you're in a trade for 24 hours or like, 8 hours or something like that. But let's talk about the extremes just to get the point across. So less frequent exposure to risk, less fees. You can walk away and let the trade play out. Let's see, what else? The moves are generally bigger. Over a single trade, right? All right, so that's 4 good points about swing trading, right? Like what's good about swing trading? There you go, that's it. Now let's edit this title and say benefits of day trading. So which it also covers scalping. I'll put that in brackets or parentheses. Okay, and then, oops, 1 second, there we go. All right. Now what font was this? Let's just copy it across, okay. Let's edit the crap out of these because these aren't the benefits. All right, okay, what's a benefit of day trading and scalping? Fast results. So it kind of like it both punishes, well, I mean all trading either punishes or rewards you, right? But let me just delete that. I don't really need to say that. But fast results, you're getting results more often, more frequent. So if you're an impatient person, the lure or the attraction to scalping is there, and we all fall for it, right? We're all part of that allure of the fast results. We want fast money. We want to get rich quick, right? Maybe I'll put that in the brackets. Get rich quick, which is the trap. You can also lose quick. All right, so yeah, fast results. What's some more benefits? You can close your trades and go to sleep with no stress. About an open position. Right. So that's a long point, but anyway, it's there. What's another benefit? Chuck it up in the chat if you can think of a benefit that I'm not covering here about day trading or scalping. I can't think of many, to be honest. Like, I think that's about it. You get fast results. Yeah, you can get out of things quicker. So, I mean, if you want to, you can cancel a swing trade at any time, right? So if you want to go to bed and not worry about it, yeah, go ahead, cancel it. So, you can almost mimic that that benefit in swing trading too. But I wouldn't. Let it stop out. If it's going to stop out, it stops out. But yeah. So as you can see, guys, like, I think swing trading is going to serve you better for your account, for your peace of mind, your stress levels, your life. If you have a life outside of crypto, this is a good option. Now, what do you need? What are some detractors in both? Let me delete. Wait, let me edit this. Need to say like pros and then cons, or benefits and detractors. Okay, pros and cons. Cons. Lots. It's kind of like the counter to the swing trading, right? It's frequent exposure to risk. More fees paid. What else? The more, like, see, when you're taking risk more, you're stopping out more too. Like, because you're not going to win every trade. Like, if you're going to stop out, 15 trades in a row, that can become pretty expensive. Like, it's going to eat away at your capital. So there's many cons there. Over trading, I guess. Emotional trading, because you're making decisions impulsively when you're scalping. It's impulsive. Impulsive action or activity encourages impulsive activity. By you, as it encourages you to be taking action, like here, there, everywhere, like opening, like being high frequency trading, like, oh yeah, let's do that one, let's do this one, let's do that one. You're adding so much risk, you're exposing yourself to a lot of risk every day, and you're paying lots of fees. And as a beginner, do you really think that you're that good to make, even just a 60% success rate with your trading? Like, be honest with yourselves. Are you getting that? Is scalping and day trading actually serving you well, or are you losing more money than you're making? And if the latter is the fact, if you're losing more than you're making, consider this option, guys, as a beginner. So we'll say it's, sorry, hopefully this stream is still connected. It's giving me an error message saying that it's not smooth and that it's buffering. So let me know in the chat if you can still hear me. But I'll keep typing this up here. So fast results, get rich or lose quick. Close. So that's not really a pro there, is it? I'll just go like that, get rich quick. Close your trades and go to sleep with no stress about an open position. Yeah, so there's only two real positives there. The cons are frequent exposure to risk, more fees paid, over trading. Emotional trading encourages impulsive activity. Now, another con is it's very punishing to beginner traders. So, and we'll put here as a pro, it's more accommodating. These are the pros here. Now we need some cons. Slow. It's slow. Let's be honest. Like, swing trading is slow. It's going to be painful for the impatient. What else is a con of swing trading? less frequent opportunities. Your capital or your liquidity is tied up, giving you less options to take other opportunities, right? Your capital. It's in proper English. Instead of gonna, I'm going to say going to. It's going to be painful for the impatient. What are some other cons of swing trading? Can anyone think of anything else that's like a detractor to swing trading? I can't think of that many, to be honest. Oh, here's another pro for scalping. More frequent opportunities, which is kind of like the trap in a way. It's like a lure to bait you into taking more positions more often, more frequent opportunities. Another pro, I guess, is your capital is generally more liquid. So that means you've got access to your money more often than not when you're scalping, because either you're in a scalp which lasts, a number of minutes, X amount of minutes, and then you're out. You've either taken profit or you've stopped out. So that means you're free to roam around the market and see if there's another opportunity that's going to present itself. So yeah, that is a pro of scalping. You have a little bit more. You have more options, but to address this as a con with swing trading is that you can just not trade with all your capital. Keep some, keep your powder, keep your liquidity, keep in a certain amount for when other opportunities do come up that you want to take advantage of, right? You can still keep your swing trade open, and this is why we don't trade with our entire account per trade. It's better to be using a portion. It's better to be using a portion of your account rather than the whole thing, just so that you can take advantage of other opportunities that may present themselves, right? Let me get this to a clean part of the chart because I want to screenshot it and then put it up in my Discord for people to... And by the way, obviously feel free to add to these lists if you can think of more pros or cons for either. By all means, for it. Let's get a bigger, fuller screen. There we go. I'm just gonna, oops, I don't want to do that. Let me grab it like this, move it to there. Okay, cool. There we go. I'm gonna screenshot that. Like such, and this is going to go into the Discord. Go over to my announcements and I'll tag everyone so everyone gets the message. All right, let me read some of these comments. I'm going to delete all that. We've saved it into the Discord, so it's there for life now. What's happening right now with Bitcoin? where are we at? Let's bring these levels back in. So price levels, key levels, the recent TA. That was last weekend. Little did we know what was coming. Well, I mean, a lot of us had an inkling, you know, a hint of like, oh, this ain't looking great. We've got lower highs and lower lows. We're sliding down the slide here, slip and slide. Let's bring the events back on. So that's where the funds rate came out. Remember, that was a party. That was a good time. 25 basis points, ripped up, made a new high for the year. And then ever since that high, we've just been pulling back, you know. So to anyone that saw that opportunity of this high, like just being a, you know, like a sell the news kind of thing. Like, I mean, the news happened and it rallied after the news. So, but if you saw this high, this lower high here as a signal that, hey, ooh, we've got ourselves a lower high, guys. Like I might open a short here and just see what happens, see how we play out. You know, I'm bearish. I don't expect prices to go much higher than 24K. Congratulations, you did a good thing. Like, you made the right decision there because you've caught all of that price action. So now, look, the next major thing is not looking for a short, is it? Because the opportunity has, like, the best part of that opportunity has come and gone already. You know, so like opening a short now, you're late. You're late to the party. You know, there may be, I'm not saying that there's not more downside potential, but when you're late to a move, you just got to understand that you may be getting a bad entry into the overall move, right? Let's say, for argument's sake, you open a trade here short because you expect further pain on Bitcoin, which may happen. But look, you're going to potentially see some kind of dead cat bounce in the coming hours that maybe comes back up here to test the underside of this September high from last year, right? Like the support structure from back over here from last weekend, you know? And that could be hard, that could be painful to ride that out, that drawdown if you're taking a short. So it's better to just wait for the ideal time. Like, you want to catch your shorts at a discount. Don't pay the premium for your shorts. And it's the same with longs. You don't want to catch it at the top of a move. You don't want to pay a premium for your longs. You want to catch it on a discount. So wait for the pullback. If you're looking to short this, wait for this bounce. Like, wait for any kind of positive move, like against the trend. So we're in a downtrend, guys. Lo and behold, as we know, since up here, we are in a downtrend. That's quite obvious, you know. So, you know, and that's looking at the 1 hour time frame. Let me turn these back on because I made my point with the lower time frames, but I do like to have them there for specific purposes. But yeah, like from a high time frame perspective, let's look at the daily. I'm going to hide all the drawings just so we can actually see the candles properly. This does have the beginnings of, or it's still considered an uptrend, I would say, because look, we had a low here, a high, a low, a high, low, high, and you can see that it's actually moved price up. And from a macro perspective, we're above the previous highs of November and September of last year. So the problem is, though, we didn't quite get the high of August. You know, it's still out there to get tagged, and we just haven't been able to do it on this push. But that doesn't mean we can't do it later. And I can almost guarantee that we will do it later. It's just how much later? How much later are we talking here? Anyway, I'm going to wrap it up pretty soon. This isn't going to be a stream that goes into the daily close because I do have to go to work soon. So, but yeah, I just wanted to mainly speak about how the character of the market has changed over the past few hours. And you know, obviously that change happened a number of days ago, but it wasn't confirmed yet because we still had the support of these lows. as I drew out in the previous stream, right? Let me get rid of some of these levels so that we can just see the structure. What are these? These are the new rising and falling wedges that we're going to pay attention to. So I'm going to put them into the recent TA folder, and then we can turn them off and on. Cool. The events. All right, cool. So there's the structure, guys. We broke that support. It's pivotal, right? Pivotal. We've got a high, a higher high, a lower high. Breaking support. Reversed. So in the short time frame, like on the hourly time frame here, we have reverse and we're on a downtrend until further notice. Now that further notice, like what's going to change it to going back up again? Like what pivots am I looking at? I'd like to see it break this high to get it back on track, and then also make a higher low. Like that would get me saying, okay, look, we're back on trend again. Like we've made a bounce. Like this is just hypothetical, right? Like this would be the case of where things are looking positive again. If we get back above that point there. Now remember, it is, I'm gonna type this out so you can like visualize this. It's the highs. Wait, let's talk about an uptrend first. Uptrends are dictated by the low, the behaviors of the lows. And then downtrends are dictated by the highs. And I'll draw out why that's the case. Or instead of dictated, I'll say defined. That's a better word for this context. Okay, do highs matter in an uptrend? No, they don't. They don't define the uptrend. The lows define an uptrend. What defines a downtrend? It's the lower highs. It's the highs that define the downtrend, not the lows. And I'll show you why that's the case. So let's get a blank part of the screen. Let's draw just a very simplified uptrend. Okay, uptrend. Wait, let's do that again. Let's end it on a high. And let's give it some variation too, just for the sake of like explanation. Let's go like this, and then maybe like that and that. There's the variation that we're looking for. And you know what? I can just copy this. We'll say this is the uptrend. Now, what's keeping this as an uptrend? And it's the lows. So there's a low. We're just going to call that low. Now, higher low. There. Higher low. Higher low. Higher. Higher. See how that's all higher? A series of higher lows? That is our uptrend. That's what defines the uptrend. Now, I'm gonna focus on the highs next for this uptrend. And do they matter? Do they define the uptrend? No, they don't. So we've got a high, we've got a higher high, but look, a lower high. Ooh, that's interesting. We've got a lower high. But this is a higher high. This is just our first high, so we'll just call it high. High, higher high, lower high. But then we get higher high again. And then, you know, obviously the next one's a higher high. So you can see, just because we got this lower high does not mean that it invalidated the overall uptrend. You know? Hopefully that makes sense. And look, it's the inverse relationship for a downtrend. So let me remove these. And there you go. That's the example of why it's the lows that define an uptrend. Now, if we were to do this, if we were to go like that, and it doesn't matter where this high is because it's not defined by highs, the downtrend, that is your change of character. So as soon as price got lower than the previous low, that's when it became a downtrend. You broke that character. And then obviously after you break the character, you're now looking at the highs to define the downtrend. So the highs need to start setting lower and lower. Okay. Let me go back to where it was. Okay, cool. Now let's invert this and talk about downtrends. And it's the same, but it's just in the opposite direction, right? We've got our first low and our first high. We've got a lower low. See how the lows don't matter in a downtrend? Because we've got a higher low here, but that doesn't mean shit. Lower low, lower low. Okay. So we've got a high, a lower high, a lower high. See how it's staying as a downtrend because of the highs? Lower high. It's only until you break that combination of lower highs that you say, oh, we've actually changed the characteristic of the trend. We've gone back to uptrend. And this would be a change of the trend. And I'll show you why the lows don't matter once this is changed to higher highs. Like that there. See how the low got lower, but the highs got higher there. So that's breaking that downtrend to an uptrend because of the highs. Now remember, it can break back again because once you get into an uptrend, and this is why I'm saying the trend isn't really confirmed until you get the break of structure. So you can get a change of character happening all the time, to where it keeps you guessing because it's all over the place. But it's when it's followed by a break of structure that is the signal for confirmation that the trend is alive and active and well, right? So change of character is okay, pay attention, but then the break of structure is okay, yeah, now we're on. That's the green light, Now what's happening with Bitcoin right now? This is inverted. Let's go back to this. Okay, look. This hour has started to show the signs or the hints of being like this may be a pivot here. This is maybe a bounce for the short term, right? I'm talking short term, in the next hour or so. Maybe we do see some kind of relief off this bloodshed, That doesn't mean we're breaking the downtrend. It's just a lot. We could make a lower high, you know what I mean? And that would keep the downtrend alive. If the high that we get next is lower, then hey, downtrend's still on. So yeah, I don't know if that helps, guys, but I felt like it was necessary to explain that. Because that is market structure, and understanding market structure is gonna serve you well. It will. It'll help you identify what's going on with the market and what you should be looking for. Generally speaking, the trend is your friend until the end. So you want to be looking for longs in an uptrend, and you want to be looking for shorts in a downtrend. So right now, we're in a downtrend on the hourly time frame, right? So we should be looking, or this isn't financial advice, but you've got higher probability of winning shorts than winning longs at the moment. So that doesn't mean to just go short at the drop of a hat. It just means look for short entries because the trend is down and the trend is your friend. You don't want to be counter trend trading because, that's not to say you can't still win trades, but you're trading against the overall direction of the market. And it's going to be your gains aren't going to be as impressive in a going long in a downtrend. So get short in a downtrend, get long in an uptrend is basically the gist of it. That's the basics, right? Keep it simple. Keep it simple, stupid. KISS. I don't know if you guys have that saying in the US, but keep it simple, stupid. The other, like the PC version of that is keep it simple, silly. Or keep it short, sweet. Keep it simple. Anyway, enough rambling about that. I think I'm pretty much, that's a sign that I've kind of like run out of fuel, run out of things to say and talk about. Let me jump through the comments before I wrap it up. Sorry, I've kind of ignored you guys today with the comments. So, what's up, Honest? What's up, Boxer Burn, Aaron, MG, MSJS? MSJS asked, are we going to 18K? Good question. I wish I knew the answer, dude. I really wish I knew the answer. If anyone tells you with any certainty that we're going anywhere, they're lying to you. They're guessing, you know? Like maybe they're like, oh yeah, I've got experience. I'm good at calling and things, you know what I mean? Like, but okay, cool. You've got a track record of getting it right when you guess. Okay, no big deal. Like, I'm not taking that risk. I'm not gonna back your guesses with my money. Like, just because you've got a strike rate with that. I'd prefer to go off probability and risk management and my own analysis than someone else's opinion, right? So always have that as your priority, like as a rule for yourself. Do not follow some guru, or because look, they can be wrong and you can be very disappointed if they're wrong and you lose money. And is that on them? No, it's not really on them. It's on you because you followed them. So take responsibility for your actions, guys, and then you'll develop your own sort of trading muscle or technical analysis muscle, for lack of a better term. And that means you don't have to rely on anyone else because you've got your own outlook and your own way of reading the chart, okay? And that means you don't need to depend on other people for your positions. You know, it's experience. Like, the worst time for investing and trading is when you're a beginner. You're gonna lose the most money as a beginner, like more often than not. If you're losing money as a professional, maybe look for a different job or a different hobby or whatever, you know. But generally speaking, if you're a professional, you're a professional because you've been successful and you've figured out risk management and how to behave with your trades and in your investments, right? Like that's why pros become pros. And that's why they have a long career in this space, like in markets. I mean, there's no people with long careers in crypto yet because it's still only 10 years old or whatever. It's only a young market. I'm still a beginner. I'm green as hell. I'm a grasshopper just like you guys. But all this channel is me trying to figure out what's good and what's bad information to begin with. For the complete newbies, what are the traps? What are the pitfalls? What should you avoid doing? Where have I gone wrong in the past? What can I tell you guys to avoid doing and copying so that you don't lose money? Like, if you're just trying to protect what you do have in the game, right? And if we can help it, maybe make some money too while we're at it. That's the point of this channel. It's just a starting point. And just, being transparent and honest with you guys is what I try to be. And that's only going to help you guys if I'm honest. So if I'm bullshitting you, that's misleading, and that's not going to help you guys if I'm lying, right? Or if I'm talking crap and posing in front of Ferraris and faking it. That's I'm going to try and keep that as the ethos and the the ethical approach of this channel is just to be honest and humble about where I'm at, and that's it. That's all that matters. What other comments has been said here? Yeah, make sure you smash up the like button. I've only got 14 people watching. Not complaining, not complaining. I'm just saying it's interesting to see how we go through the waves of like viewers. Like sometimes it'll be 30 or more, and then other times it's going to be 10 or more. You know what I mean? Like it ebbs and flows. The interest in this space is reflective of what's happening usually. But anyway, if you're here and you're listening, like, good on you for keeping your finger on the pulse. And that's not to sort of disrespect the people that aren't watching. It's like maybe they're busy, maybe they're just not around to watch it. They'll watch it when they want to watch it or whatever. All good, all good. You turn over your money faster. That's right. So scalping, that's a benefit of scalping. You're turning your money over faster. That's it. Scalping feels like you have more control, which is kind of like misleading in a way, I feel. DOGE's XR penis says, less chance your wife or girlfriend will leave you. If you had $2,000, what would you throw it into for best return on investment? Geez, that's a tough question, isn't it? That's the $1 million question. That's like asking the Holy Grail. Like, oh, what's good? How do I win? I'm sorry, I don't have that answer. Try to find a channel that actually gives you the answer to that question. I doubt you can find it. I doubt you can get a guaranteed answer to that question. It's a common question though. A lot of people ask that, and it's a good question, but there's no good answers, unfortunately. Trends are more defined with swing. Yeah, I agree. Swings are more powerful. Higher time frames have more power than small time frames. What can we dip down to and still be bullish? Good question. Good. Now that's a good question. What can we swing down to and still be bullish? I would say we can come all the way down and tag 18K and still be regarded as bullish. If you're looking at this structure here, we've got our low, we've got our high, we've got a higher low, higher high, higher low, higher high. We're still in this region of higher low, aren't we? In the bigger picture. This is obviously this, I'm going to put this sideways because we don't know what it is yet. That's just pure sideways. But look, if this low comes in below here, that's when I'd be like, ooh. Because it depends on the time frame, doesn't it? It really depends on the time frame. But if we can maintain 20,400 as support, then that's, you know, we're still alive in the bigger picture. Like on, say, like the daily time frame. If we can keep above 20,400, then from a bigger perspective, we're good. We're still good. If you're talking for like 1 hour chart, we've broken. We're coming down, baby. 1 hour chart, yeah, we're coming down. You know, because you're looking at the more sensitive time frame now. You're really zooming in on the noise when you come down to the 1 hour. So it's, you know, low, high, low, high, low, high, low. You know, we've already broken the previous lows on the hourly time frame. So that's why it's downtrend, right? We're sort of back into like a short-term bear trend, really. That's what it is. That's what it is. You know, you can find a time frame to match your bias. That's the other funny thing about it is, you know, if you wanted to be a bear during this uptrend, just go to the 1 minute chart and look for a series of lower highs and lower lows, and you probably could have found it. You know, you could have had a bit of look. Let's go back to a part of the uptrend. Okay, this was a structure during the uptrend. Because remember, big picture, at this point we were in the uptrend, but look at this bearish structure here. The bears would have loved that. And that was a short-term little bear run, you know? It's a baby bear cycle, bear market. So as you can see, context matters. Time frame context matters as to whether you're bullish or bearish. And generally speaking, like from a monthly perspective, we're in a bull market still. That hasn't changed. What do we have to do to break the monthly bull market? We have to get below $3,000 for Bitcoin. You know what I mean? Like that's what we're dealing with here. On a weekly perspective, what do we have to do to get bearish? We kind of have. On a weekly time frame, we did. We broke these pivots to the downside. So yeah, we got, this is, you know, a bear trend on the weekly. So monthly and above though, we're good. We're golden. I've noticed that at least with Bitcoin's current track record, the bear markets only exist on the daily, like from charts from the weekly and below. They don't really exist above the weekly for the pivots, you know, the major pivots. So I don't know if that helps you, but yeah, you basically, it's like semantics almost, like you're playing around with context. If you're saying bull or bear, you know, are you on an uptrend or you're in a downtrend? It really depends on the context, guys. So contextually speaking, on the daily chart, we're in a bull trend still. On the 4-hour chart, you could say we've pivoted and we're coming down, you know, because you can see the pivots a bit clearer on the 4-hour, like the noise, you're amping up the noise. And on the 1-hour, it's even more noisy. You can see the zigzags are really noisy and all over the place. So our perspective, I would argue that 4-hour is a downtrend now. 1 hour is a downtrend, 15-minute downtrend, 5-minute downtrend, 1 minute. Scalpers chart. Oh, look, we've got a little uptrend here on the 1 minute. See that? We've got a low, a higher low, a higher low, a higher low. We had remember the highs don't totally matter in an uptrend, but we had equal highs there, equal lower highs there, higher high, higher high, lower high. You know, this is the line in the sand for the scalpers right now. 21,850 is the line in the sand. But yeah, context matters, and I'm running out of time. Let's zip through these comments. If you had $2,000, we already addressed that. Trends are more defined with swing. Yep. I suffer with anxiety attacks with swing trades. Okay. Yeah. Well, if you've got anxiety for your swing trades, you don't have the correct risk management in play. You don't have you're using too big of a size for starters. If you're suffering anxiety with a trade, it's either your position size is too big or your leverage is too big, one or the other, and you're scared of your stop loss. You're scared of stopping out. You have to be comfortable. You have to gear things in such a way as to where you're comfortable stopping out, guys. That's the key here. You know? Like if a stop out is no big deal to you, then you know that you're doing it right. Obviously, we're trying not to stop out often, but stopping out is a reality that we have to deal with. It's gonna happen, guys. It happens to the professionals. Stop losses exist for a reason, you know? So yeah, if you've got anxiety, it means something's wrong with your strategy. If you're swing trading with anxiety, then yeah, you need to reduce your position size, or you know, you're playing with too high leverage. Something is amiss with that if you've got anxiety. Litecoin and Matic, yep, sweet. I'm guessing what are they moving or something? Or are they dumping? Where's my like top 20 list? LTC dumping down 7.27% for the day. Matic, was it Litecoin and Matic? Matic is down 3. Oh, it's actually holding ground pretty good, Matic. I like Matic. Matic's a cool altcoin. Yeah, a lot of pain on Bitcoin today, most definitely. Hey, what's up, Slick Rick? How's it going? Been holding these shorts for weeks, finally crushing it. Hell yeah! That sounds like BLS. What's up, BLS? Crypto Al. Jack. Okay, there's a few comments here from Jack. Will the crab fight back? The crab's always fighting back, man. He's got his claws out all the time. his nippers. Daily close will be interesting today. I feel like the daily close is always interesting. But yeah, particularly today. Sure. Yeah, agreed. You're interesting, says Serrano. Jack says, your mum's interesting. Ooh. Taking it back to the 90s there with the mum jokes. The mum calls. Take it back. Your playground insults are... Hey, use your college degree and try again. Honest AF. Keep my couture ex-wife name off your keyboard. Alright, I don't think I need to read those out. You guys can read those ones. First time watcher, epic insight, thank you. You're welcome, Kenneth. That's a very nice comment to hear from fresh eyes, you know. Getting perspective from someone that has no bias to me, for or against me, is cool. It's refreshing. I like seeing that. And I obviously I love the OGs and all the people that are loyal to the channel, so thank you. I stopped. I was using small positions. All good, man. It's a part of it. Now look, the thing about stop losses, if you find that you're getting stopped out a lot, something's wrong with the way you're getting in. Like your analysis is off. You need to work on your setup. Like, what are you taking as signal? Are you FOMOing in? Like, are you jumping into something late? You know, more often than not, that is the case. Like, people getting short now, they're late to the party, and they're probably going to get like stopped out. I wouldn't doubt that if you tried to short Bitcoin at this very moment, you're probably going to get stopped out if you've got a responsible stop loss. The move happened hours ago, guys, for the bears, right? The only reason they're all celebrating is because the trades they opened hours ago grew, they matured into a profit position. That's the trap for new people, is that they hear all these people making money on shorts. It's, yeah, because they opened their shorts hours ago. They're just seeing the result of the position they took hours ago. You're late to the party, you missed it. Stop trying to short it. wait for the moment, the right moment to short. Just as you got to wait for the right moment to long, guys. So, yeah, that easier said than done. I know FOMO is very attractive. FOMO feels good when you're doing it at the time. Usually you regret it like within 1 minute after FOMOing. Usually you go underwater fairly quick. So yeah, FOMO is not good. FOMO no good. Generally speaking, if you're rushing to your computer to trade, or you're rushing to your phone to trade something, it's a bad trade. It's impulsive. Impulse is a response to emotion. Trading emotionally is not good. Stop doing that. Stop trading emotionally. You need to be a calculated, you need to sort of be like a psychopath. You need to calculate something out. You need to look for an entry and a setup. It's like you're this predator in a way of the market. You're preying on gains. Like, gains are your prey. You have to be proactively looking for a setup. Don't be reactive to the market, like where the market dips and you react with a short, you know? reactive people get wrecked, or they make small money, they make little money. You have to look and aim for the setups that the bulk of the people don't see at the time, because they're busy paying attention to what happened in the previous 2 hours, you know? Like people getting bearish now, it's like, yeah, you're kind of late there, buddy. Anyway, that's my take on being late to a bull cycle or a bear cycle, or a bull move or a bear move, or a bull run or a bear run, or whatever you want to call it, right? A move is either fresh or it's stale. So right now, the short move is stale. Don't open positions when things are stale. You want to catch them fresh, guys. Catch them fresh. Get as fresh as you can be. The fresher the better. A way to tell if something's fresh or not is moving averages. Moving averages are cool to do that. Let's turn on the EMA cross here, and let's just look at the 200. So I'm gonna hide the short ones, and let's just look at the 200. Let's turn everything off except that yellow line. Okay. Interesting way to turn an EMA on, I know, sorry. Let's hide the drawings, we don't need them. And let's go down to, say, the 15-minute time frame. I'm actually rambling on like longer than I should be here. I should be getting ready soon. All right. I've kind of forgotten what I was going to say, but... Oh yeah, whether a trend is fresh or stale. Okay. If price has broken above, like, let's say we're trading the 5-minute chart, right? Are we going to use that as an... No, let's not use the scalpy charts. Let's use it like a longer play chart. Okay. A fresh trend, guys, fresh, is when price has freshly broken above a moving average. This is one way to define a trend, right? You know, there's a couple of retests here. Dipped back below, but look, the bull trend was fresh right here, wasn't it? Because this is where it left, and it never came back, like, during this whole time. Like, not even a touch. Okay, bang, touch, first touch here. That's a little warning sign. Ooh, shit. Look how stale the trend is, even here. Like, the trend is stale. It's stale up here because we've been a long time since that point, since that trend started off getting above the 200. You know. So now that we've defined that as that uptrend is stale, it's dead now, to be honest, because we're back now below the 200. But check out this. Okay, it was fresh here to take a short because we broke it, and it happened here fresh. It was stale by this point. It was already starting to move back up toward it by this point. So if you didn't take profit here, then you missed some of it, and you sort of almost round tripped it back to here. But like, anyway, it's come back up here. And that's for another story. That's for like choosing where to take profit, right? Or your strategy for taking profit. But yeah, fresh trend, stale. Okay. This was noisy as all hell here. I wouldn't have traded that. It's so volatile. So I would have just waited, I guess. Look, breaking it here. Look at that fresh break of the 200 hourly simple moving average. Fresh trend. Take positions in a fresh trend, guys. Stale. Like, you know, timing is everything. Wait for something fresh, or wait for a retest of this line. You know, because the more stale you take a trade, the more risk you're taking on. If you take a trend fresh, your stop loss can be tight, and it's a cheap entry. Like, it's not going to cost you anything if it stops out. If you take a position here as short, and your stop loss is at the previous pivot up here, like look how much drawdown you have to endure. Like look how far your stop is away. That's a very expensive stop loss because you're paying a premium for your entry to short. Take this concept and apply it to every time frame in bull or bear markets, and it's gonna serve you well. Like, just, you need a fresh move. You need to get in on the right timing. Timing is everything. All right, that's enough from me. Thanks again, guys, for checking the stream out. A bit of a smaller crowd, more intimate crowd today, but that's no problem. Smash up the subscribe if you haven't already. If you want to see more of this channel, you want to hear more from me, yeah, subscribe, like and subscribe, guys. Like and subscribe. All right. Have a good one. Have a good night. Have a good day. And I'll catch you in the next one.